Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic evening so far. Thanks for hanging out with me. Thank you for coming. Appreciate each one of you hanging out with me on Independence Day Eve. I know you probably have other things to do tonight, but thanks for your diligence and motivation to come. It will pay off. Obviously, we're having a lot of fun with this overnight trading strategy. So got a lot of things to show you guys. Some new things. I've put together some new back testing that I think you guys will like. We'll obviously show you the up-to-date statistics with the different variations of the overnight trading strategy. We're going to teach you, for those that are new to it, how to trade it from the very beginning. Like how to get started with it, how to utilize the journal, which we made a new journal this week for you guys to use. So a lot of stuff to get into. So I'm excited to get into it tonight. Like I said, just want to welcome everybody here. Also want to give a shout out to those watching this in the recording. Want to say hello to you guys and welcome you to participate in any way that you can. Before we get started, as always, need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Well, let's go ahead and jump into this. So, trying to think what we should start with. I think probably the best thing to do is just going over the rules, how it works, the methodology behind it, and then making sure that everybody knows how to keep track of the results. This is one of those strategies where there's it's simple enough that anybody could trade it, but here's what the requirements to make this work are some discipline. So you do have to have some discipline to be able to spend 5 nights a week where you specific nights too. You can't just pick any night. It has to be, starting Monday night or Sunday night all the way to Thursday night, because you can't trade it Friday night. You can't trade it Saturday night, right? There's 2 nights a week you're not going to be able to trade. Even if you want to, it's just not going to work, right? So you have to be able to be disciplined enough to get into the markets at a specific time. Obviously, if you live more out west like I do, it's a little bit easier on the eyes, right? Because you do have to stay up a little bit late. If you live out east, there's definitely a way to trade this. You can trade it earlier. You're just not going to get the full Sydney range. So far, I've seen it affect a little bit the strategy, but a lot of the times we're having the same results. Like pretty much everybody won last night. I don't know anybody that lost. Maybe you lost potentially in one direction, but then won the other. I could see that, but by and large, most people made money. So um, so okay, so that's working. But so I'm just trying to illustrate that there's a requirement to be diligent with trading it, right? So that's one thing that's required. The other thing that you've got to be pretty good at is the ability to log your results. Okay, so you do need some kind of a journal. You can use one of the ones that I've put together, or you can use one that you've made. If you're pretty handy with Excel or Google Sheets, you could put it together. You could even make a physical one. You don't necessarily need a digital one. You could just write it down on a ledger, and that would be fine. So that's a requirement with this strategy, right? Um, so so in fact, let me just head over here. We'll start talking about this. But so those are some of the requirements. Like this is the journal that I've been using, and then I'll show you the one that I put together that's a little bit more simple than this one. Um, but before we get into the whole journaling, I just wanted to share like some of the requirements to trade this, because if you're somebody who struggles to keep up with that kind of schedule of taking something at a, generally specific time every night. Now, I wouldn't say you have to do it like what I do is I actually stay up till midnight, and I take the trade at midnight. Give or take like maybe 12 o'clock. Maybe I might take it at 12:05. Like last night I did it at 12:05. I did the other night I did it and I was up late, and so I did it till 12. I did it at 12:30, but I stayed up late. So that works for me. For many of you, it's like, hey, the most I can stay up to is like 10:30. That's fine. You can make that work. But the big thing is being able to keep doing it, because I have forgotten in the past to take these trades, and it kind of messes things up. I remember the nights where I forgot to take these trades, and it just kind of makes it hard, because then you wonder, okay, where should I start my sequence again? Or like, how should I journalize this? And my journal makes things tough. So enough discipline to be able to do it. And also, the 5 times that you do it a week, it's probably going to take you, let's see, I've been trading this in 3 different accounts separately. And to take it in all 3 accounts, it takes me about 10 to 15 minutes to get it into all 3 of them. If you're just trading one account with this strategy, you're probably going to just need to do it once you get good at it, it might just take you 5 minutes or 7 minutes. But when you're new to it, it could take you 20 minutes. If you're kind of new to the lot size calculator or new to just some things, it could take you some time. Double checking your work and all that kind of stuff's important. But outside of that, it's just like I said, it's just 5 nights a week. We'll just say generally you need 10 minutes, 10 minutes, 5 nights a week. Basically looking at an hour a week of actual work. But you can't just put that hour in whenever you want. You have to put that 10 minutes in each day that you're trading it. So that's why I say there is that kind of discipline, and that's what's required. All right. And then it takes also, I would say, some level of understanding, knowing kind of how the strategy works, because you are increasing your lot size with this. Not every night, but many nights you're increasing your lot size depending on your sequence. And so it's important to kind of know where you are in that to be able to trade this. Okay. Well, awesome. Let's talk about the rules. So here's how I want the webinar to go, and we can go any direction you guys want, but here's kind of how I see things going. We're going to talk about how to trade this, and the methodology of like why this works and what we're trying to accomplish with each trade that we take. Then we're going to talk about the results so far with the different variations. Okay. And then the last thing that we'll do, the third thing we'll do, is I'm going to show you some back testing that I've done, and I'm going to show you guys how you can trade this. I'm going to show you how you can trade this not just in the London session, but some ways you can trade this through Tokyo and also through the New York session. Okay, so there's actually this is just the tip of the iceberg of how many ways you could use this style of trading, because it's kind of a style if you think about it, and it's a risk management technique, and there's a lot of different ways you could make this work. So let's jump into the rules. So here's how this strategy works, guys. Let's pull up I actually have TradingView pulled up here. So let's actually go to the euro dollar, and I'll show you the trade that we took last night. It's fun because we did have a huge win last night. That was really great. How many of you took that trade? Just let us know in the chat box. Just curious to see if you guys were able to snag a win last night. I know many of you indicated throughout the day. I probably had a dozen or so people reach out to me in the program through text, email, or Telegram, just saying that they took the trade. And they were really, really excited about it. I was too. It was about picture perfect. Nice. Wes got it. Roger got it. Lee got it. Keith got it. Great. That's good to hear. Awesome. Awesome. Okay. Well,
hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
All right, so here's what we do, guys. So first of all, there needs to be this like understanding of generally how the market works. So Forex is open 24 hours a day, right? And you've got four different sessions. You have London, New York, Sydney, and Tokyo. And it kind of keeps the market open all day long. Right now, as we're in this webinar, the Sydney session is open and Tokyo opened about 9 minutes ago. So basically, when we got hopped on, Tokyo opened up, and those markets will be open. At least Sydney will be open for about 6 hours. It will close in about, I guess, 5 hours and 50 minutes is when Sydney closes. And then an hour later, London will open up. So in about 7 hours, London's going to open up. In fact, I was just texting a few people just barely in London, and I realized, oh, they're not going to be able to text me back right now because it's like the middle of the night for them right now. But for them, it's actually, if you live in London, just on a side note, if you do and you're watching this in the recording, you're going to be trading this in your morning. So you're going to want to be more of a morning person to be able to be disciplined to take this particular trade. And this trade's going to run while you're at work if you live in London. And if you are, I'm trying to think, if you're somebody that lives in Australia or New Zealand, I know we've got a lot of people in the program from those places, or we've got a person from Malaysia. You know, if you live and the land down under, right, then you're going to have to take these trades. Let's see, at the end of your workday is when you'd be taking them. Okay. And then for us in the United States, it's kind of later at night when we take them. So, all right. So with this, the most important thing to know is that London is the biggest session. So most of the volatility that you see in the market will happen during London. So for example, last night there was a huge move in the market, huge move on the euro dollar. Boom. When did that happen? Well, pretty much at the beginning, first couple of hours of the London session is when most of that volatility came into play. Okay. And then if you look at the previous days, if you look at some of the biggest moves that you see in the market, most of these are going to be, in fact, let me change this session to just London. If you can see it, it's kind of like very light green. Most of the volatility, like right here, this is all London right here. This is London right here. Most of that movement happened there. Here's London right here. Yeah, so not every day it's not picture perfect, but yeah, here's most of the movement for the day during London. I mean, the euro moves all day long, but yeah, okay, here's London. So that's a lot of movement right there. Here's quite a bit of volatility inside of here. So that's important to know. In fact, 72% of all foreign exchange transactions take place during the London market. And this happens to be for us in the United States while we're sleeping. So that's a lot of volatility to miss out on if we're not participating, right? And many of us don't participate in the market because we are asleep during that time. But it is one of the most active times to be a Forex trader. So what do you do? Well, some people just stay up and try to trade it, and some people just don't trade it because they can't. Well, I think we have a solution to this that I think is pretty cool. So we're able to take advantage of this. Now, the next part of the methodology here is that you have four sessions, right? You have the London session, and then New York is probably the next most volatile. The next one is probably Tokyo. And then the last one is Sydney, which is the least volatile. Okay. So Sydney, the Sydney market does, no offense to, the folks down under, but it just doesn't move the market that much. Okay. I mean, it might move the Australian dollar, might move the New Zealand dollar. You might see the yen move quite a bit during that time because the Tokyo market overlaps, but you're just not going to see a lot of movement, especially with currency pairs like the euro and the British pound. They don't move very much during their session. And what's interesting about that is it's the session that just precedes the London market. So when Sydney closes at midnight for me Mountain Time, that's 2 a.m. Eastern. So at 2 a.m. Eastern, Sydney closes, and at 3 a.m., so an hour later, London opens, right? And so you have the quietest session as far as volatility and volume goes that's right next to the behemoth London session, which is the most volatile session, right? So you have both of those right next to each other. And so the idea with this is, in fact, I use this indicator called sessions. This is going to highlight, let's just highlight Sydney here. So this box is Sydney from last night or from yesterday. You can see the euro did not do much during this time. It's kind of quiet. That's Sydney in action. Okay. Again, no offense to Sydney, they just don't do a lot. And then what happened here? Well, London opened. So as soon as London opens, this crazy move happened right here, right? So that's really cool. And the reason why this is important is because the market's going to break out of Sydney. So Sydney's going to have a high and Sydney's going to have a low, right? And and when London opens, the market is in fact going to break out of the high or low or both of Sydney. Sometimes it goes both ways. Sometimes it'll break below the low and sometimes it'll break above the high. In this case, last night it broke above the high and it just kept going above the high of Sydney and it just kept on going, right? So the idea with this strategy is to take advantage of the low volatility to kind of create a box for ourselves. We call it the Sydney box. And then you're going to put an order to buy if the market breaks out of the Sydney box. So that's what we did last night is we put a buy ready to go before London opened. So before, as you go to bed, this is like the last thing you do if you live in the United States. You're going to put this in and then you're going to just head off to sleep. Okay. It's kind of, I actually do a lot of my nightly routines earlier now because I've kind of changed my schedule up just a little bit. So, if I do I like to do some reading before I go to bed. And I also, obviously I do my hygiene stuff. So like I like to go do all that earlier. And then I kind of make this the last thing I do. In fact, I just kind of put it on my laptop next to my bed. And so that way I can just make it a quick little thing. And then I'm just, back to sleep. I don't want to have the blue lights on very long anyway. So anyways, I'm just letting you know there's a way to make this part of your routine if you want to participate. And I found a way to do it without messing me up too badly. And this has worked. So, yeah, what you want to do is you want to highlight the top of Sydney right here and the bottom of Sydney. So, the top of Sydney is right here and the bottom of Sydney was down here, right? And so that's going to create the Sydney box, right? And then you're going to put your buy at the top of the box, and the stop loss of that buy is going to go halfway through the box. And then your take profit after you set up your stop loss is going to be 5 times your potential loss. Okay. So many of you have probably figured this out, but it's easier to place the stop loss first and then the take profit with this strategy. So you're going to want to put your stop loss halfway through your projection tool on TradingView, about halfway through your stop loss or your Sydney box, and then go ahead and place your target. If you try to place your target first, you will have nothing to kind of project. You won't know how far to put your take profit. So you need to put your stop loss about halfway through. Okay. And then go ahead and move your target. All right. So that's exactly and so what I did last night is you can see this says 1 to or 5.02. That means that I'm risking, one unit and making just over 5 units if this trade wins. Okay. So yeah, as the market just ripped to the upside last night, it basically just went straight up, and it didn't take too long. I think we were in this trade for, oh, let's see. This is on a 5 minute chart. This could have been done in just like does anybody know how long this was? I think it was just like an hour or an hour and a half, maybe 2 hours. That's how long our trade lasted. It was quick. Um, the market was just able to do what we wanted very quickly. Um, but very cool. Okay, so like I said, you put your stop halfway through the Sydney box, and then after you do that, it's a lot easier to get your take profit 5 times um, the Sydney box. We used to do this 3 times your stop loss, and that actually works, but it does seem like the results are far better if you make your take profit 5 times. So you're looking for a bigger return is essentially what we're doing. Bigger win, smaller losses is kind of the idea. Okay, you don't want to stop there. You also want to place another trade. You got to place a sell stop order because we don't know if the market's going to break up or down. We really don't care which way the market's going to break up or down. We just care that it breaks out. And in most times, it will break out. I did have my first ever, this was kind of strange to me. This had never happened before except this week. I did have a day this week, a few days ago, where I woke up and nothing had triggered. It was the strangest thing. And I think that probably will never happen again, at least not for a long time. And I think the reason why it happened this week is because we're in the doldrums of the summer. This is probably the worst week to trade of like the entire summertime. Like if you could pick one week out of the year, except for that week between, you know how Christmas and New Year's has that week in between. That's like the worst time to trade any market. Stocks are actually okay during that time, but Forex is absolutely terrible. Forex and futures, you just never want to trade between Christmas and New Year's. And then I'd say the second worst time to trade is that the week of July 4th. So that's what we're in right now. Anyway, it's good that we got a win last night because I'm happy because now I'm like super excited. Got all this fun plans ready to go for this week, and it's fun to end on a really solid win and to kind of like wrap up on a win. So it's really fun, obviously, because obviously last night was really good. So when you're setting this up again, you got to place a sell stop too. You don't want to just place the buy. We don't know which way it's going to break out, but it will break out. And so you got to put your sell stop at the bottom of Sydney, and your stop loss is going to go halfway through. So basically, your stop loss for the buy and the sell are essentially the same price. Okay, like you could literally just put your buy stop loss at your sell stop loss, just put them at the exact same price. So long as it's in the middle of the Sydney box, you're just fine. Okay, and then your take profit is going to be 5 times your stop loss. So that's why I say it's easier to do your stop loss first. So when you're projecting this out, I always set my stop loss and then I set my target. By the way, this is if you don't have TradingView, I would suggest that you get at least a free version with TradingView. It's free if you don't have it, so that you can use this projection tool. This is the easiest way to do things, in my opinion. So if you go to the left side of TradingView, here's the projection tools right here, long position and short position. I use this every night when I set this up. It makes it super easy because when I'm trying to figure out my take profit, when I set up the projection tool, it tells me it highlights in green right there. Okay, that's my take profit on my sell. Here's my entry on my sell. Here's my stop loss on my sell. Here's my stop loss on my entry on my buy. And then lastly, my take profit on my buy is up there. So it makes it super easy if you use TradingView. You don't have to do this. Um, but for me, it makes the process happen in just a few minutes, and I can get this done with and out of the way, and I can just head to bed as soon as I set this up. Okay, so last night was obviously super easy. This is about as classic as you want. Um, So let's put it this way, if life were this simple, you'd win every single day. Obviously, you're not going to win every single day. As you guys know that, for those of you that have been trading this, but this is a perfect world scenario. And in sometimes you are going to like a lot of people say, oh, only if there was a perfect world. Well, sometimes in trading, you do get it. Sometimes the market's random. You're going to get a certain type of market condition, like a whipsaw market condition. Some nights you're going to get a breakout market condition like last night. Other nights you might get like a breakout market that maybe just whips one way and then you lose just one trade rather than both trades. Um, so there's a couple of scenarios that can happen when you set this strategy up. By the way, before I go into those scenarios, actually I'll go into them, but I wanted to leave some time for you guys. What questions do you guys have about this setup so far? Because I want to make sure everybody knows how to trade this. And as you guys know, this is also recorded, so you can come back and watch it later. But let me read some of these questions. Roger says, I use the Lux Algo sessions indicator. It draws the box for me. Oh, yeah. Oh, by the way, I learned a cool thing about that too, Roger. And I think you know this. Okay, so sessions, by the way, you can get this right here. If you just go to Trading View and you search indicators and then just search sessions, there's dozens of session indicators that you can use. I use this one called Sessions on Chart by Aurochs. I think it's this one, or maybe it's Sessions by Lux Algo. It's all free. You can just click it and figure out which one you want. The one I use right here, when I go to the settings in TradingView, it allows me to select the session that I want highlighted. I just highlight Sydney only so that I can do this. And I just discovered this a few days ago. Or was it you, that Roger, that showed me this? I can't remember. But if you do this right here where it says activate high-low view, check this out. So I'm actually going to make my chart. I love this. This is so cool. It's almost like they know people want this. There we go. Okay, so activate high-low view. So it will plot out the top of Sydney and tell you where the top of Sydney is. So it's like, okay, right there's the top, and then right here is the bottom. Here, I gotta get rid of this circle here. Right there is the bottom of Sydney. There we go. Perfect. And so you could use just the high-low view, and then it will just tell you, okay, there's the top of Sydney, there's the bottom. And then yesterday, here's the top, and then here's the bottom. It'll just do that for you, which is really cool. Um, yep. Okay, I'm gonna go back to a white chart. I used to like the black charts a couple years ago, and then felt like the white charts fit me better later on. So I used to use black charts for like 5 years, and then I just went away from them. But I had to use the black chart there because I can't see the indicator very well. You can't see it very well um, unless you use a darker chart. You don't have to use an indicator, by the way. You could just use it here. If you just get a sticky note out, I can tell you when it opens and when it closes. So Sydney opens at 6 p.m. Eastern. Okay. And it closes at 2 a.m. Eastern. So it's open for 7 hours, or not seven, excuse me. That's 8 hours, right? Yeah, that's right. Yep. 6 p.m. Eastern is when it opens, and it closes at 2 a.m. So it's open for 8 hours. Okay. Lee says, is there a setting on TradingView to switch the RR tool from ticks to pips? Mine always shows it in pips until this week. I'm sure how to change. Oh, interesting. I don't know, actually. Dang, that's frustrating. I don't know. Does anybody with experience want to chime in on that? I don't know. That's super frustrating. I'll have to watch a YouTube video or something to figure that out, just because I don't know how to change that back to pips there. Yeah, interesting. Yeah, no, sorry to hear that. All right, guys. So any other questions on how to trade this, or at least set it up? So I think if you use the sessions indicator, it makes it simple. The other way you could do this is just draw a vertical line at the beginning of Sydney if you know when that opens, and then put a vertical line at the end, and then just plot out the top and the bottom. That's another way to do that. But everything is based off of how big your Sydney box is. Okay, now one other thing I wanted to share. I've had a few questions on this. Some nights your Sydney box will be ultra small, like the euro dollar won't even move more than 10 pips. If that's the case, I force the Sydney box to be at least 11. In fact, I've kind of changed it to 12. So between 10 and 12 is okay. But if your Sydney box is only 8 pips, don't put in a 4 pip stop loss. Okay, that's just way too tight for what we're doing. I would suggest that your minimum stop loss is between 5 and 6 pips. So you should never have a stop loss smaller than 5 or 6 pips. Okay. So just a little anomaly there. Last night, I think this range was like 16 pips, if I recall. Let's see if I drove from the top to the bottom. Actually, no, it was about 20. So it was about 10 pips each way was the stop loss. And that's great. That's perfectly fine. Okay. So a 10 pip stop loss. And then I did about a 50 pip target on in each direction. Um, that was easy to do. So just a little side note on that because I saw a lot of questions coming this week saying like, "Hey, what happens if my range, my Sydney range is only 8 pips or something? You know, that's way small." And I totally agree. So if you have to force it, what I would do is just add another, like if it's 8 pips, maybe add 2 pips to each side. So if the Sydney high just add 2 pips onto the top of the Sydney high and add 2 pips to the bottom of the Sydney low. And that will force your box to be 10 or 12 pips. All right. Most nights that won't happen, but there could be some nights where your box is too small. I also had another question that just came up. I didn't see it in the chat box, but I'm sure it's a question you guys will have if you haven't thought about it yet. But what happens if when you go to set this up, the market's actively at a high? What if it's actively at a Sydney high or actively at a Sydney low? What do you do? So there's actually two ways you could do this. You could just like if it's actively at a high, you could just go in at market if you wanted to. Um, or if it's at a if it's actively at the Sydney low, then go ahead and just put in the sell. Most people have done this though, so you can do that. Most people have just put their entry a few pips off of the current market price. So you could, like if the current price is, wherever it's at, and then 2 pips below that, you put your sell stop. You could do it that way if you wanted to as well. So that's a question I've had a few times. Um, I've done it both ways, and I don't really think it affects the results all too much because if you're that close to entering, you were probably going to get entered into the trade anyway, so you might as well just take it at market. Um, yeah, yeah. So long as your range is wide enough to have a 5 or 6 pip stop loss, I think you're fine doing that. All right, guys. Okay, let's continue on here. So I don't know if I don't see any other questions on how to take this. So here's the results of this. Well, and actually we haven't finished everything. So setting this up is half the thing, right? And then when you're going to your lot size calculator, this is also a requirement. I ask everybody to use one of these when you're trading this. This is the one that I use. By the way, here's the link. I'm gonna give you guys this link in the chat box. You have to use this, okay? Like there's no way around this. And actually, if you think about it, in a second here, we're going to explain why this is important, but there's really no use in trading this strategy unless you work the lot size. Okay, you have to be able to work your lot size to make this profitable. You're going to see that in just a second. But basically, what you would do is after you plot your trade out, you're just going to go ahead and fill this out as you go along. You're going to put in your account size. Let's say it's 100 grand or whatever it is. And then you're going to put in your risk ratio. Let's just say it's the default. I usually do 0.25%. And then last night, the stop loss was about 10 pips because that was the range that we were given, was about 20 pips range. So half of that is 10. So that's going to be your stop loss. And then you would come back over here, put in 10, and then you would figure out, okay, this is I'm risking $250 on a 100K account, and that's going to be a 2.5 contract, right? All right. So that's basically what you would do. We'll come back here if we need to. Okay. So now let's come over here. So one of the things that makes this thing tick is the multiplier. Okay. Now this is a lot of people get a little edgy about this topic because they're like, man, I don't like the idea of working the system a little bit, but I think this is also one of the biggest reasons why it's profitable in the way that it is because there is such a thing as a multiplier. So what this is, we call this the sequence multiplier. So if you have a losing day, the next day you take a slightly larger lot size with the idea that you're getting closer to a win. Now, this is also known as a type of martingale, and I get it. I'm not a big fan of martingales myself. However, I think they're actually, here's my personal opinion. If you control it and you understand the risks of it, in my opinion, it's one of the best ways to make money in Forex, if you control it. If you lose control of it, which with this, in my opinion, it's hard to lose control because you have a set sequence. But if you lose control of martingale and you don't have really your own stopping points and you don't know where to stop, yeah, to me, that would be more of a gamble. But if you follow the multiplier to your set plan and you're okay with the risks and you know what your potential loss would be, to me, it's actually one of the most profitable things you can use to your advantage. This actually helps you defeat the randomness of the market, because the market is extremely random in nature. And so if this is kind of your offense against the market is to attack it with this multiplier. So the strategy, so here's some results of the strategy. So you guys already know what we've been doing is we use a 1 to 5 RR ratio. So that's really good already. Your average win is much, much greater than your average loss. In fact, right now, if you look at the results of this, since May 1st, today is, July 3rd, so just over 2 months of results, this has made $2,751.96 per winning trade. So each winner has averaged, nearly 3% profit on a 100K account. The average loss is only $492 on this 100K account. So when you think about it, your average win is, what is that? That's like 6 times more, like 6 to 7 times your average loss. So we're definitely getting huge average wins out of this. Um, Now, this is the part that a lot of people might turn off from unless they understand the nature of the strategy. It has a 27.12 win rate. So if you think about it, if you take 100 trades, 27 of those trades would be winners, and let's see, what is that? 73 would be losers. So it loses 73% of the time. That is a reality of the strategy. Um, it's funny though, because I have traded strategies in the past that win 90% of the time, 93% of the time, but I was unprofitable with those strategies years ago. And it's funny, I never really understood the power of having your average win so much greater than your average loss. I think a lot of people are so focused on win rate, win rate. I say that 3 times fast, right? Win rate. So your win rate is what everybody focuses on. In fact, when I'm on these, I'm constantly trying to grow the program just because, it's a business of mine. So I try to grow. So I get on calls with people, and I would say one of the most common questions I get asked by prospective traders is, "Hey, Steve, what's your win rate?" And it's a great question to ask. It's not a bad question. However, I never get the follow-up question. Well, not never, but most of the time I never get the follow-up question like, "Hey Steve, what's your average win to average loss?" And I think that might even be the most important question to ask because it's not asked very often. And I think it's um your win rate doesn't mean anything unless you know the other half of the statistic, which is your average win to average loss, right? So you could win 90% of the time, and that might sound really attractive and really good. But if your average loss is 50 times more than your average win, it doesn't matter that you're winning 90% of the time. So here, this only wins 27% of the time, but when it wins, oh my gosh, like it's an incredible win, right? Just like we had, like last night was just so fun. I remember waking up to all these text messages from just elated traders, right? And then I looked at my accounts because I know I took the same trade in three other accounts. And yeah, it was a very exciting morning to wake up to. And that's the power of having an average win just so much greater. So you have two things going for you. You have your average win, which is, or excuse me, there's two things that contribute to this. One is your RR ratio. So how big is how many pips you're going for versus how much you're risking. Like last night, we went for 50 pips. We only risked 10. Okay. So when you win that, obviously that's five times more, but that's not the only thing that really juices the trade. What's the second thing that juices the trade? Well, typically when you hit a win, it's probably the biggest lot size you've ever used in the sequence as well. So you got those two. So you got both of those things working for you at the same time. And when things go in your way, 27% of the time, it's just absolutely remarkable what you can get. Um, so here's the multiplier that I've been using. So I've been using this 1.5 multiplier. So when I have a winning day, the next day, I go to my default lot size, which is 0.25% of my account. So when I'm going over to the position size calculator here, I'm going to put in 0.25 for each trade, the buy stop and the sell stop. Okay. If I have a losing day, let's say I lose, okay, the next day I'm going to go to 0.38. Okay. And each trade's going to have a 0.38. So I'd come in here and I would change my lot size calculator to 0.38. And then that's what I would put in. And then if that day lost, I'd go to 0.57 and to 0.86 and then 1.29. And my last one is 1.94. Okay. So 1.94% is the highest I'll go on the 1.5 multiplier setting, or the, I guess, variation of the strategy. Uh, I do that just because I want to put limits on how far I'll go. I've always, so far in the last 2 months, I guess a little over 2 months, I've always hit a win so far. I can say that with confidence. I have hit a win within that. There's 6 days there potentially. So I've always hit at least one winner within 6 days. However, something I mentioned this morning is that I recognize that there could come a day, and there probably will be a day in the future where I will lose and I won't win within 6 days. I'm sure it's coming. The thing is, I've already kind of figured out how much loss there would be. I'd actually lose about 6 to 10% of my account if I went all 6 days without a win. So here's my game plan if that happens. This is very uncommon. Again, it hasn't happened to me yet, but I'm sure it will happen eventually. If I get to the 1.94 multiplier and then I wake up the next day and I still wake up to a loss and I have not won, my plan is to restart the sequence at 0.25. Okay, so I will not increase beyond 1.94%. Now you can do, for you might look at that and be like, 1.94 is too much for me. I don't want to lose that. If you want a more conservative setting, you can use the multiplier of 1.25, and that gives you an extra 4 days. So you could technically go 10 days without a win. And then on the 10th day, if you got the win, you'd be back in the black. You'd be profitable very, successfully, and you'd be looking good. I'm going to show you the results of each one. I'm going to show you the results of the 1.25 multiplier, the 1.5. We can even look at the 2x. Now, I don't use the 2x because if you think about it, if you're 2x multiplying, you don't have very many days. You have like 4 days. So if you don't hit a win within 4 days, um, you lost, right? Like you're unsuccessful, um, and your loss would be too big to continue. So I just stop at the 1.5 multiplier. Um, And that's what I've been using is the 1.5. But the 2x could make more money so long as you hit a win within 4 days. That you'd actually make the most money with the 2x, but you could lose a lot of money pretty quickly if you don't win. So, um, okay. Okay, let's see here. So, any questions up to this point? So, now what I want to do is show you guys more statistics. By the way, here's that link to the overnight trading journal that I made for you guys. Here's the link. You guys can all have this. You're not able to edit this journal unless you make a copy. So once you come in here, go to view or file, excuse me, and hit make a copy for yourself. And you can edit your own copy, or you can download as an Excel and you can edit your Excel. There's tabs down here for each month. So here's July, here's August, here's September, October. If you need a November, you can just duplicate the tab and add November as you need. But there's all the way up to November there. And you can go ahead and start filling in all your results. All you got to do is just put in your daily risk per trade. This is where you keep track of your multiplier, how much risk you're taking on that particular day. And then right here, you're going to put in the result. You're going to also put the dollar gain or loss right here. If you happen to trade both directions, if you lose both ways, just put in the cumulative result. Like if you lost $250 on both trades, just sum up the loss and put the full loss of both trades in there. Same thing with the pips. If you lost 10 pips on both trades, just put 20 pips, the sum of the full day. And then this will keep track of your results for you. This is an easy way. All you got to do up here is just change your account size. So everything else will calculate for you. Just put in right here whatever account size you have, and everything will just automatically calculate naturally, which will be nice. Okay. Um, let's go back to the statistics. Okay, I want to show you guys this. So this is the one that we've been using. It's the 1.5 multiplier and the 1 to 5 RR. I like this one a lot. It's very lucrative. Since May 1st, it has made on a 100K account $23,735. Interestingly enough, it's only made 136 pips. So how do you make $23,000 on 136 pips? And it all goes down to the multiplier and the RR ratio. So it's not a real strong edge as far as like predicting what the market's going to do. Um, I wouldn't say it gives you that kind of an edge. I think it's a great opportunity that can be traded every day. It's very tradable and something that's easy to understand, but it doesn't really give you an edge unless you work the numbers, okay? Which is exactly what we do. So you can kind of follow the results here. So like back down here, this was May 1st. I had a losing trade, but the other trade won. And so it made $1,250 on one trade, lost 250 on the other for a total of $1,000 profit. The next day, it lost both directions. I lost 0.25% on both directions. But then the next day, on May 3rd, I won at 0.38% for a total of $1,900. That covers all the losses from the previous day easily. You lose 500 the previous day, you make 1900 the next day, you're up 1400 total. All right. Then May 6th, I had a loss. So I went to 0.38. I lost both directions that day. On May 8th, I lost both directions. And then on May 9th, I finally got a win. That trade made $4,300 and it covered the previous 3 days of losses. Okay. So that's kind of the whole idea. The worst sequence I've had so far was between May 17th. So you guys can actually go see this. By the way, I give this journal up for free too. You just can't edit it. This is the one that I use. So if you want to follow along with me, if you want to actually see how I'm trading, bookmark that journal. Can't do anything with it, but you can at least see how I'm doing with the strategy. Um, my worst sequence ever was between May 17th to May 24th. Okay, so this one I had to go 1, 2, 3, 4, 5 days. I had 5 days in a row of net loss. And then on the sixth day, I finally got a big win. That one was not fun because I actually did get to the last day in the sequence. I only had one day left and I got to the 1.94. Fortunately, it worked, but I did get, in fact, to the last day in the sequence. I've shown you guys this before. What would have happened if I had lost that day instead? Let me show you what that would have looked like. So right now I'm up $23,735 on a perfect, it's been perfect. It's been a great 2 months with this. Now let's say I had lost here instead. Let's put -6. Here you go. So I'd be up 12,000 in 2 months instead of 13,000, 23,000. So yeah, it can hurt you quite a bit if you hit bust, but it's still profitable. Like that's still an average of about 6% a month on 100 grand. Even though I hit bust right here, and it took my account from, I went to a high point of 106. I was at 106, and then I went to a low point of, I actually got down to 97,000 before I hit the next win. So it was about a 9 grand, so a 9%. If you think about that, that's a 9% differential. If that had happened. It did not happen, but I just want you to be aware that if I had hit bust, that's called bust, by the way, if I didn't mention that earlier, if you go through the entire multiplier without getting a win. Okay. And that's called bust. It doesn't blow the account, but it's a major blow. Okay, so I want to make that extremely clear right now and just add into the original disclaimer that it is a terrible blow to your account if it happens. Like that was about a 9% blow. Um, and I mean, that doesn't destroy your account, but it is a massive hit. It will demoralize you in a lot of ways. Like it can happen, and probably so long as you trade this, that probably will eventually happen to you, especially if you're kind of on this higher setting with me, because the 1.5 is still, so I'm going to put it back. So this is still really good. I mean, obviously 23 or 24,000 in 2 months is just over 2 months is great. But I just want to make it abundantly clear that that's what you're up against. If that were to happen, you could hit bust and you could wind up backwards. Um, so if you're concerned with the 1.5, because I know some people are concerned with that, there is a much more conservative setting that buys you a lot more time and way less risk. And that's the 1.25 multiplier. Okay, so I'm gonna buy that just so you guys know, because I'm a risky roo, I'm gonna keep doing the 1.5 because I want that money. Okay, like I want that money, all right. And I'm okay with a bust because I'm personally mentally fine with that. Okay, so that's where I'm at. But if you're not okay with that, then don't do the 1.5 because like you could get pretty close to that. And if you're not okay with that, then I would suggest that you adopt the 1.25 or something even smaller. So this one buys you an extra 4 days. The multiplier is a lot less. Um, and so here's the results on the 1.25. So on the 1.25 multiplier with the 1 to 5 RR ratio, this has made 11,000 over the last 2 months. So from May 1st to July 2nd or 3rd today, it's made $11,000. Okay, same amount of pips, really hasn't changed. Pips don't really matter with this. It's all about the dollars at the end of the day, anyways. Um, okay, so this is where I'm at. Biggest drawdown I've ever had with this was between, it's really small actually. It was not big. It was between the 17th or this, so I got to a high of 103 and then I got down to just over 100. So biggest drawdown was 3% on this. I never had a loss worse than, I think that's right, right? I never had, yep. Worst loss was 3%. So that's not bad at all. That's prop firm material in my opinion. Like you're not gonna fail. Um, I don't think you would fail at least. Um, I don't want to say you guaranteed or words like that, but I think I'm just going to put it this way. I think it'd be very difficult to fail on this lower risk setting. You'll make about half, actually, no, you're going to make like about 40% of what you would make on the 1.5 multiplier. So adding that extra 0.25 on the multiplier really does have a tremendous effect on how much you'll make. Obviously, $24,000 of profit is way more than 11 grand, but most people wouldn't scoff at this number either. And this is a very low risk setting, in my opinion. The worst trade I ever had to take, or the biggest I ever had to go to, was this 0.76, which 0.76 is right here. That's day six. That's the biggest trade I had. I still had 4 days in my arsenal. So before I'd hit bust, I could have gone another 1, 2, 3, 4 days without um I would have gone another 4 days without I could have basically I had 4 days more I could have gone, which is great. So I don't feel like I don't think you're ever gonna get too far away from this, if that makes sense. This is a much more lower risk setting. I actually here's kind of my game plan with my prop firm accounts. I've been doing the 1.5 multiplier on the prop firm accounts to get them funded because I'm trying to fund them fast. And then my game plan is actually to go to the 1.25 after they're funded to keep it just to keep things tight and steady and to keep them funded. So that's kind of what I've been thinking. So Lee says, can we still use the 1.5 for a funded account challenge? So my answer is kind of interesting. I think you can. Um, yeah, I think you can. The biggest thing though is that if you did hit bust on the 1.5, you'd be treading really close to blowing the account if you did the 1.5. Because as I showed you guys, the if I had not won on that day I showed you on the May 24th, that was my worst sequence ever so far. If I had not won, my drawdown would have been 9%. Okay. So I just wanted to make sure that's very clear. Okay. I think that's good with statistics. I had two more things I wanted to show you guys. I'm sorry I ran out of time. But there's two more things. One thing I wanted to show you guys is back to the chart real quick. I didn't go over the scenario. So real quick, I'll just spend 30 seconds or a minute on this, and then I have one more thing to show you guys about the New York session. So basically, um, about 3 nights a week, expect to get whipped both directions. Okay, this is an incredible strategy. It's very powerful, and you can make a lot of money with this. I know firsthand that you can. But here is the catch, if you want to call it a catch. It takes a while to get a win sometimes. It only wins 27% of the time. And sometimes there can be many days in a row before you get a win. So, about 2 to 3 times a week, expect this to whip both directions. So, basically 50 to 60% of the time, expect to wake up and you're going to lose. Okay. You're going to wake up and this thing is going to hit the buy and it's going to hit the sell, and they're both going to hit their stop loss. And it's going to feel offensive. It's going to feel insulting. Okay. I've been there. You guys have been there. All right. And you just roll with it, right? You journalize it into your journal, and then you put it in, and and you come back the next day. Okay, this could ruin your day, right? Like if you're only winning 20%, 7% of the time. So I want you to think through those emotions now because you're gonna feel them later. Okay, you're gonna get whipped both directions. Monday, Wednesday, Sunday night, Monday, Tuesday, and then maybe a win the next day. Expect a win about once a week. Okay. I would just expect maybe one win a week, but not every single week you're going to get a win either. But some weeks you'll have, like last week, we had 3 wins, 2 to 3 wins. That was a pretty good week. I actually kind of like it when there's a few nights in a row of loss. Okay. And then you've got, and then one night a week, maybe expect just one trade to lose, and then the other trade just doesn't trigger. So 2 to 3 nights a week, expect whip both ways. One night a week, only one trade loses. One night a week, you get the win. Okay. All right. That's all I really wanted to share there. Uh, Yeah, those kinds of scenarios feel very personal. I love that. By the way, it's good to see you back, Chris. Yes, very personal. It will feel insulting, like I said. I think that's the way to put it. It'll be insulting when you wake up in the morning. Okay. But you have mornings like this, like when you have mornings like today, that's what makes it all worth it. Right? Oh man, it was a good morning, wasn't it? All right, guys. Okay, I did not save a lot of time for this, but and I'm gonna have to do this like next week, but I wanted to show you guys this, and maybe we'll talk about it in the COT report call that's coming up here in the next few minutes. But basically, there's another way you can trade this same strategy if you use NAS 100. I've done some back testing on NAS 100. If you were to set up this exact same trade on NAS 100 before the stock market opens, I have seen some of the best breakouts that go 1 to 5, that go 1 to 7 or 1 to 10. Like right here, here's an example of one. Um, if you set this up before New York opens. So anyway, that's just a sneak peek on that. I didn't have time for it, but that's what we'll talk about next time. And I'm sure we'll talk about it again. If you want to talk about it in our one-on-one calls, we could talk about it there too. All right, guys, appreciate each one of you. Got to wrap up. Thank you for coming. Enjoy the rest of your evening, and we'll see you guys in the next call.